Welcome back. And what we've been talking about more recently is really the situation with meme coins and Solana, and how I personally believe we're going to start seeing a lot of the valuation from Solana draining out and going into some of the projects with actually more long term fundamentals like Ethereum and the layer twos built on top of Ethereum. And now we're starting to see kind of the situation playing out, right? Blockworks posted this the other day. They said crypto market no longer able to separate meme coins from Solana. And so what we're starting to see is a drain happening, an exit from Solana. But before we go there, Vitalik Buterin criticizes crypto's moral shift towards gambling. And typically we don't hear from Vitalik on kind of what's going on in the crypto space, but now we are specifically with what the situation I believe is going on within the Solana ecosystem with all these meme coins. Vitalik voiced concerns over what he described as moral reversal in the crypto industry, particularly regarding criticism of Ethereum's stance on blockchain gambling. And Ask Me Anything on February 20th, Buterin was asked to share his frustration with the crypto industry in the past year, and he highlighted his disappointment with the backlash against Ethereum for not embracing blockchain-based casinos. He said, quote, "Perhaps the most disappointing thing for me recently was when someone said Ethereum is bad and intolerant because we don't respect the casinos on the blockchain enough, and other chains are happy to accept any application, so they are better." Buterin added that if the blockchain community had this kind of moral reversal, he would no longer be interested in participating in the blockchain space. And so, first of all, I don't think I, from what I've gathered about blockchain and a lot of these ecosystems, is not it's not that difficult to create a coin, similar to creating an NFT, right? There's marketplaces for this, and so all of this kind of like concern about who's launching what coin, what develop. It's like one developer is involved in every single meme coin launch within Solana's ecosystem. It's like there's nothing else built there, nobody else is doing it, and so I do see meme coins as gambling. Do I think that people should be able to interact with meme coins the same way that they were interacting with NFTs and paying millions of dollars for them a few years back? Yeah, I mean, if they really want to do that, they should be able to. But yeah, I mean, there definitely needs to be education around what is going on because, guys, the whole Libra situation. It says Argentina scandal fuels sell-off on favorite meme coin platform, and people are still kind of like holding on to, well, Solana's not really down that much, even though it's down 40% in the last 30 days and probably going lower. Because here's the thing, guys, and I'm going to show you guys charts. I have charts somewhere here. I think right here. Yeah, it, if we look at the actual charts for instance, number of active addresses on the Solana network, this is down substantially since November. November was 6.6 million, and now it's 3.4 million. So that's basically half. That shows that there is an exit occurring in Solana's ecosystem, right? And it starts with the meme coins, right? And there's still a lot of liquidity moving through the meme coin ecosystem. But the big money, they're already out. And this is where I think that the big money is already moving into the Ethereums and the layer twos and some of these other cryptos that have not been performing as well because they believe what we're talking about. There is going to be a huge shift out of the Solana ecosystem into other ecosystems where they'll probably be kind of chasing a different narrative besides meme coins, maybe AI coins or meta coins or whatever. We will have to kind of wait and see what that looks like. And there's still going to be time before we reach this kind of max capitulation point in Solana and the meme coins. There's still going to be trading and new coins launching, but again, the big money, they can't differentiate meme coins from Solana. They like, and what we've talked about on this channel is what else has been built on Solana that is ready to launch. Like, is there any AI technologies? Is there any financial products like DeFi that are launching that are going to change the game? And if not, it's like, what has been developed on Solana over the last few years, right? And I think that's what the big money is looking at, right? That's why we're seeing on the charts, okay, significant reductions. This is number of active addresses on the Solana network monthly. You can see from November 135 million down to last month 105 million. That's a 10-15% reduction. And this month, we're basically half over and it's 50 million. So it's probably going to be close to 100 million as well. But it's big, big, big drop, number of new addresses on the Solana network, how many new users and new projects are being launched. Significant drop since November. And you could say, well, that was the top of the market. Yeah. Well, what does that mean if that was the top of the market? That means that we're probably not at the bottom of the market just yet. You can see here total fees on Solana from, I mean, this was a big spike in January, but even from back here in November, 13 million in fees a day, and now we're down to 5.2, 6 million, 4 million, 3 million, significant reductions. And so we have to kind of keep in mind, like all this other stuff that's going on in the meme coin space, this is going to drain liquidity out. It says Dave Portnoy crashes the Greed token by 99%, then launches Greed 2 amid controversies. Like I said before, guys, there are 3 people in this world that I would launch a crypto coin under the advisorship of, and that's Brian Armstrong from Coinbase and the Winklevoss twins from Gemini. That's it. I mean, people are going to lose money. He's probably going to lose a lot of money thinking that he's going to make it, and I just don't think that it's going to be possible. Now, talking about Vitalik commenting on what else is going on in the crypto space, Vitalik actually commented on what happened in Argentina. In response to this post from an intern, it says, the main thing I can say after the Libra, that's the Argentina coin incident, is that I believe even more in Bitcoin and Ethereum than ever before, and I'm sure Argentinians will play a crucial role in global crypto adoption. We're resilient as F. Now, Vitalik responded saying Argentina's Ethereum community is full of amazing builders who have already contributed some of the most important software in the Ethereum ecosystem. The energy and determination to build on Argentina's current momentum and use crypto and other technologies to build a prosperous 21st century society is real. The recent news should not be taken as a reason to give up, but rather as an example of why education is so important. He said that he's continuing to be optimistic about Argentina and Latin America's contributions and role in the space. What they're basically saying here is Ethereum and Bitcoin and the technologies behind it have been building within the Argentina ecosystem already. And what they're saying here effectively is what I believe a lot of the big money is thinking. Right. And so the big money that are looking to implement blockchain technologies or implement decentralized finance within their businesses in the Argentina ecosystem, where do you think they're going to go? Like, which cryptos do you think and blockchains do you think they're going to use? This just goes back to Bitcoin maximalism and Ethereum maximalism, believing that these two, because they're the largest, because they have the most decentralized ecosystem of builders and active communities. And this is not just chasing a hype or a story or a narrative, that these are the coins to choose, right? I mean, we started to learn this during the previous cycle when we were analyzing a lot of this on the channel, is that there is a case to Bitcoin maximalism. And it seems that the longer somebody's kind of in this crypto ecosystem space, the more you see people moving towards maximalism, whether it's, Bitcoin only or Bitcoin and Ethereum or, top 3 coins with maybe XRP as well. We're seeing a lot more of that. And I think a lot of that just comes down to this is what we're going to do. This is what we're going to be launching. This is what we're going to change the world. And none of it does. I mean, these celebrities launching coins saying they're going to change the world with their coin. It's like, how are you going to change the world with your coin? Like, how does a coin change the world? It can't, right? So listen, there is a lot of risk in any of these assets. It's just being able to identify, like, okay, even if I believed in Solana, Solana went from $8 to $250, and it's had no pullbacks really, right? Besides this recent 40% pullback from $250 down to $170, $160, right? So my main point is that, if you're going to trade these markets and understand the tokenomics as well. In the Solana portal, we can see a major unlock event coming up in the beginning of March. It says $1.94 billion worth of Solana, 11.2 million Solana coins are going to be moving into the market. This is from the Solana estate. I believe this is a cliff unlock from the original Genesis block when they released the coins, and certain parties that receive Genesis coins, they have to hold it for a certain amount of time. Is this going to make be a sell order? I don't know. Maybe. I mean, it's going to the FTX estate, and the FTX estate probably owes a lot of lawyers a lot of money. So maybe they are going to be selling some of that onto the market, and that's going to also put some sell pressure on. So it's kind of all adding up to where is the money going to flow? And in my view, it's going to flow into these other ecosystems with fundamentals where they're already building, where there's already integrations. And now, based on my analysis of the market and what I've been putting out there, I'm like, does anybody else agree with what I'm saying? We're starting to see the narrative shifting towards wait, Solana and Solana and meme coins. There's no differentiation at this point. So where are people putting their money? And they're going to put it into Ethereum. $6,000 Ethereum prices are still possible, but two things must happen first. Well, personally, I think one thing has to happen. And it has to be the Solana drain game, and we're already starting to see that happen, where the money moves away from Solana and into other ecosystems. But anyway, this analyst says, while most analysts were cautious about putting any bullish punches amid the current ETH price downs, a full-time crypto trader believed the historical data supports a rally in the second half of Q1, quarter one, which we're basically in the second half of Q1 now. According to this swing trader, Ether has exhibited a market pump during the latter half of Q1 since 2020. This is irrespective of whether it's a bull or bear market, as the trader highlighted that ETH also pumped 50% during the 2022 bear market. Yeah, from the lows, right? Most people who've been buying into Ethereum over the last year are probably close to being in the red or even, right? So 50% jump, it's like that's what's going to happen in a bull market. That's not really that exciting, right? But anyway, data shows that Ethereum has experienced an average of 40% returns during the final 6 weeks of Q1. So basically, end of February into March. And with this bullish outcome progressively decreasing due to the rate of diminishing returns, thus considering Ethereum exhibits a 20 to 22% rise over the next 6 weeks, the potential price target remains around $3,500. However, this trader said that with the number of altcoins being much higher than it's in the previous cycles, he said if we don't pump by the end of Q1, his thesis is invalid and we shall see what happens. But until then, he says he remains optimistic. Here's the deal, guys. If these other ecosystems don't pump by April, right? I think we're just basically back in a bear market. I mean, I don't know any other way to put it. Most of these coins are down significantly from their highs. And if Solana goes down to $50, that's going to be like an 80% drop from the highs. And the market sentiment is going to be terrible. And I'm not just talking about Solana, right? If Solana stays under 3,000, if XRP drops down, if Dogecoin, goes back down to 8 cents, like people are going to be like over it, and the sentiment in crypto. But again, we have a lot of support coming from a lot of the agencies that were maybe anti-crypto prior. Anyway, we're also starting to see where the narrative is going to draw, right? So Ethereum transaction fees plummet 70%, hitting the lowest level since 2020. What is the main complaints from the Ethereum network? It costs too much for transactions, or it takes too long to process transactions. These are the main two major complaints. And so when you see that the transaction fees are at multi-year lows, right? 4-year lows or 5-year lows, to me, this says that this is, boom, another piece of the narrative, right? We know we have an upgrade coming up in April for the Ethereum network. Boom, another piece for the narrative. So we have the Solana meme coin drain game. We have where all of the value is going to move from Solana to other ecosystems. I believe personally, one of those are going to be Ethereum. We have historical price data showing that Ethereum is set to do a rally in the second half of Q1. We have low transaction fees. Like all of this can be part of this huge bullish narrative. And we're identifying this now. We also see Ethereum developers are releasing a new initiative to simplify cross-chain transactions. It's called the Open Intents Framework. And the new scheme aims to bring intents to all corners of the Ethereum ecosystem. So again, more integrations and more ability to freely transact, because to be the blockchain for finance and for decentralized finance, the chain needs to be able to scale. It needs to be able to connect to every other blockchain there is. It needs to be able to connect to different systems, different softwares, different projects, different DeFi ecosystems, different coins. This is very, very important, right? Bitcoin can't do what Ethereum can do from a development standpoint, from an integration of decentralized finance standpoint. we know that there's some projects like Internet Computer that are building out the DeFi for Bitcoin through cross-chain communication, but it's still not the same as Ethereum. And so, in my view, yes, Ethereum is way more developed than Solana. Ethereum is where the big money is and is probably going to continue to be moving to. And so they're already talking about higher Ethereum prices. Once we actually see a Solana drain to $100 or to $50, under $50 potentially, all of that valuation is going to move and flow into other ecosystems. And I personally believe Ethereum is going to pump. That's like my overarching thesis. Now, am I fully 100% in Ethereum? Probably not. That wouldn't make sense. But I don't just think Ethereum, the Ethereum similar blockchains like Avalanche and those kind of chains. Chainlink will do well, Polygon will do well, in my view, if that does happen. And that brings us to what else is going on and some of the risks involved and some of this gambling that we're talking about. Strategy announces a $2 billion convertible notes to buy more Bitcoin. Now, this is not surprising because we knew they were going to keep doing this. And they increased their overall outstanding shares from, I think, 300 million to 10 billion or 300,000, something like that. They increased it by like 30x. And so what did they increase it for? Because then they can sell these stocks onto the market and then they can use the proceeds to buy Bitcoin. They're also doing this now with more convertible notes. Convertible notes are basically debt. These are $2 billion in senior convertible notes to purchase more Bitcoin and fund operating expenses. The notes will feature a 0% coupon and mature in March of 2030. Each $1,000 block of notes is convertible to 2.3 shares of MicroStrategy at $433 per share, a 35% premium over the current market prices. Now, the reason they're paying this premium is because they're going to be holding it till 2030. And if they believe in the Bitcoin cycles and the fact that the price is probably going to go up, even just based on the fact that they're going to be diminishing the value of the dollar, right, through more debt issuance. But even without that, just the 4-year cycles going on, it's going to be another 1.5 cycles ahead, 2030. So people believe that the price is going to be significantly higher, and there'll probably be multiple stock splits between that. And so being able to buy 2.3 shares, if it splits 100 to 1, would be 200. Or 2/10 of whatever, you guys get the math. But the other interesting thing that I saw about MicroStrategy, it says here MicroStrategy has cut 20% of its workforce as its Bitcoin buying multiplies. This is also like very interesting that they would slash their employees when they are saying that when they're taking huge risks. Now, I get it. MicroStrategy as a company, right, as a software development company, is very different from what they're doing with Bitcoin, and they're still under the same umbrella company, but they're kind of two entities, I guess you could say. And if you go to their website, you can see that they're kind of, it looks like pivoting towards more AI and AI development, and that would be very interesting because that would mean that their teams that were part of their software development may not be the right people for the AI, right? The AI strategy and the Bitcoin strategy and all of that. So it could make sense. I just thought it was really interesting that as we're like kind of entering a bull market or in the middle of a bull market, we're seeing companies like MicroStrategy that are taking out huge amounts of debt to buy Bitcoin in a bull market at the top of the market, and that they're cutting staff, right? Because just from a glance, it's like, wait, is their Bitcoin strategy working? Because if it is, why would they have to lay off 20% of their staff, right? But anyway, moving right along, we're also starting to see other types of hints that we're going to be entering kind of probably an over-leveraged ecosystem, right? We just heard Coinbase is allowing Bitcoin-backed collateralized loans. Now OnRamp and Arch launch Bitcoin-backed lending services. The new lending product will allow Bitcoin holders to access liquidity without selling their assets. So basically, they hold your coins and then they loan you USDC or whatever the situation is. And then you pay it back. And then if you don't pay it back, then they just liquidate your coins. And the coin is probably going to be worth more than what the loan was. So they end up making out. So that's probably how it's going to go. But what happens and what we saw happen in 2021 and 2022 was as the market starts dropping, right? Because I still think that we have another leg or two legs in the bull run. But at some point, we're going to be in a bear market, and the price is just going to keep going down, right? And what happens then is when you have all of these lending services and this over leverage, even if, to the likes of MicroStrategy, because if they keep buying during this next leg in the bull run, and let's say their dollar cost average right now when I'm recording it is about $65,000. Let's say that goes up to $90,000 as they keep buying, or $80,000, or $65,000, or 75,000. Let's say Bitcoin in the bear market goes significantly lower, right? Let's say their dollar cost average gets up to $80,000. And let's say the price of Bitcoin goes down to $40,000. That means they're 50% in the hole on all of this debt issued. They're a publicly traded company. You could argue that they would be forced to sell some of it to offset the risk, but maybe not. I mean, maybe Michael Saylor will say, no, we're going to buy more, right? We're going to buy more now, and we're going to bring that dollar cost average down. But the risk is what I'm looking for, because most people didn't see the risk during the last cycle. They didn't see that FTX was so over leveraged, and all of these other lending platforms, right? BlockFi, they all went down and they all went bankrupt basically at the same time. And people didn't see that risk on incoming. I would say the majority of people didn't really see it. And they kept thinking, oh, no, we're fine. We're just in a bear market. We're in a bear market. And it was like, no. Once these companies implode, then we're in the bear market. And that's exactly what we saw. Once FTX went down, we hit the cycle low of 15,500 in Bitcoin. And they didn't even own Bitcoin. Like, they had no Bitcoin on their balance sheet at all. It was all FTX coin and Solana coin. But that's neither here nor there. We also just heard the other day, Trump said that he ended Biden's war on Bitcoin and crypto and pledges to make crypto the U.S. capital. And so he did just say this at some financial conference, Future Investment Initiative Institute. And basically he said, I signed executive orders to keep the U.S. at the forefront of artificial intelligence and to end Joe Biden's war on Bitcoin and crypto. We ended that war totally. That war is over. He started talking about people getting indicted for it. And he said, we had that vote entirely. I think everybody was smart that believed in that. And there was a lot of people believing it. Everybody who is smart voted for Trump because they pulled these indictments. He said, I don't do things for political reasons. I do things, I do what's right. I want to be at the forefront of any industry. What was also interesting is he said, I got the crypto vote. He said they tried to switch it, but by that point it was too late. He goes, I don't think that anybody who supports the technology voted for them. That's a really interesting point, because I really believed, guys, in the beginning of 2024 that we were going to see a pivot and we were going to see them kind of be more crypto friendly. The other side, right? The other side that was running. I thought that they were going to try to pump the markets up. And they didn't do it. They didn't do it. And so how can anybody who is invested in crypto not be a single issue voter, right? If you're working in the industry, if you've seen, if you're working in one of these crypto companies, if you're building a crypto company or invested, right? And so we're seeing a lot of changes coming from the Treasury and coming from the SEC, which I think are really positive for the space. And I think that this can be huge for where crypto is. And DeFi Llama News posted these 10 bills that are worming through Congress to overhaul crypto. I definitely think one of the first ones we're going to see is like a stable coin situation, because this is essentially converting the dollar into digital dollar. And they want to make sure that it's safe. They want to make sure that it is really backed by those dollars, because they want to make sure that people are not scammed or lose their money. And I think that this is incredibly important, right? We've talked about USDC for years on this channel, right? I mean, to exhaustion. And I've said on this channel over and over, any blockchain that is not directly tied into USDC is going to lose. This is not like my opinion. This is fact, right? It just is fact. It has to be it. USDC is the key, because, previous cycle, the bit license was the key for me, right? FTX could not get a bit license. That was a huge issue in my view. Why could not they get the bit license? if you think about like Kraken says we didn't get the bit license because we were operating in New York, and then New York sued us, and then we couldn't get the bit license, and then we said screw it, we're not even going to try to get the bit license. So that's a different story. But FTX wasn't, they couldn't get the bit license. That was very, very odd. This cycle, for me, it's the stable coins, because the stable coins are going to be well regulated and actually backed by dollars and a third party outside of the blockchain ecosystem, right? So nobody within Ethereum is actually running USDC or operating the books of USDC. So the likelihood that somebody working at Ethereum could actually, let's say embezzle money from USDC and make it disappear, it's almost impossible because they're two separate entities, right? Completely. And so I believe that that's part of what it is, decentralizing the ecosystem a little bit further with some centralized intermediaries, especially when you're talking about how much transacts on Tether, how much transacts on USDC, right? They want to make sure that they are able to control the flows of money. Because what if there is a hack, right? Then they need to be able to shut it off and say, no, 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 you guys are not withdrawing this money. So I do think a stablecoin situation is going to happen first. The Genius Act, it says, we believe there's a 70% chance of it passing. This act was introduced by Senator Lummis and other senators. The bill would require stablecoins to be fully backed. Okay, so similar to the other one. Fit 21, we've been hearing about for years now. Passed through the House recently. The bill sought to establish rules about how the SEC and the CFTC should regulate cryptos. I think that's important as well. And so there's 10 different ones, and you can see they're all another stablecoin one, another digital ledger one. So there's a lot that are going through. What's actually going to pass, who knows? But hopefully there is something that passes that gives clarity to these regulatory agencies, or that the regulatory agencies just take control and give clarity, because it's super important that the US stay on top of being the leaders of this new technology and how the new technology is rolled out in terms of companies building and growing businesses. This could be huge for anybody who is thinking about the future, right? The same way that, you have these space companies like SpaceX and whatever Amazon, Jeff Bezos is, um, like the going to Mars and establishing life on other planets. This is crazy stuff to think about, but like it's happening. It's just happening really, really slow. Anyway, hopefully you guys enjoyed today's video. Let me know your thoughts on everything we discussed. Do you believe that we're going to continue to see an exit from Solana, that the meme coin and Solana ecosystem is one of the same at this point, and this is going to benefit the Ethereum-based ecosystems as Ethereum banned casinos effectively, right? I mean, there's still gambling within the ecosystem, but it's not this, you don't see the Ethereum ecosystem trying to chase this narrative of meme coins. It's like Solana's doing it and they're doing it alone. And it's like, nobody is interested in meme coins really, except for a few. Anyway, see you guys on the next video. Give the video a thumbs up and hit subscribe. Crypto on.